Hi, I'm Ian Harris. I am the CEO and president of Outcrop Silver, which is a very special company. The Santa Ana project is one of the world's few true primary silver and high-grade silver projects in development in the world today.
Good to see you. I think we spoke before a while ago, but under different circumstances. So give us a little recap of who you are, what you've done relative to this project.
So I'm a mining engineer, so I've got 25 years of experience, been involved and started my career at San Cristobal and the start of that project, Senior VP of Corriente, helped get that project started construction, first mine in the history of Ecuador. 15 of my years in South America. I speak fluent Spanish. I live in Colombia, so I like being part of projects that become future mines. And I started in July of this year, pretty much after the original resource estimate came out on Santa Ana, which is more my skill set, right? After a resource is something that's been established and it's got some bones on it, or it's got some meat on the bones.
Right. Well, that's what kind of got us curious, because last time we spoke with Joe. Joe's still the director of the company, obviously, but he sort of stepped down from the CEO role. It was very much a early exploration, set it up for someone else to kind of come in and take it over the balance sheet, take it over the technical know-how. You've got a different set of skills. So how's the plan changed?
So the overall grand scheme really hasn't changed. The primary focus of the company is still, we're at 37 million ounces, but we have a pathway that was based on 7 veins. We've already got 21 identified, bona fide drill targets. So it's about executing on a resource expansion. Obviously, it's still a lot of significant exploration, but I have a wonderful VPX. But there's some really significant parts of this project that really market didn't know about or wasn't really amplified. It's got incredibly high recoveries from flotation alone, but it also produces a high-grade precious metal concentrate that could be direct smelted. So in silver, most silver projects are sometimes not silver. They're gold projects or lead projects, but a lead concentrate, zinc concentrate, might only pay you 75%, but if you can go directly to doré, you're going to get 98%. So you have high-grade silver, one of the highest-grade projects in the world. You have high recoveries from flotation alone, so you don't need cyanide to recover, and you get a high payable, which makes it very special because independent of scale, you can get into production. And so that's kind of a side strategy that we're working on right now, is small pilot production to de-risk significantly the project, can still be very, very profitable, but also the important part is de-risk the project. So basically now it's an additional pathway of creating significant value for our shareholders.
Right. Okay. Here he's saying, but what I'm trying to work out is the kind of scale of the ambition. You say not much has changed in that sense, other that you're trying to increase the size of the resource. But when we were speaking with Joe previously, it was aiming for 50, maybe 100 at a push. What are you trying to do when you talk about scale of increasing the resource? What are you targeting?
I think that it hasn't changed much from Joe. On the next significant jumps, you want to see significant jumps in the resource, because the problem with doing a resource is many people think, oh, that's what you got, or it's only going to grow by 10%. And this is a project that can grow by leaps and bounds. So we're obviously not going to be able to get in the step 1 to 100 million ounces, but you can make significant jumps along the way. I think you really want to get over that 100 million ounce mark and be able to demonstrate a pathway to that. I think it's a psychological number in the market. And so that is the overall goal. It obviously is not something that's happening tomorrow. It'll take a couple of years to be able to get that job done with some significant milestones in between.
Okay, understood. And again, so sorry to keep harping back to the previous conversation, but as the base, as it were, just raised $4.5 million bucks. We're talking about additional expansion drilling of about 12,000 meters, which to us suggested around $3 million bucks worth of spend. I mean, so what did you get out of that? How did that go?
So it's a little bit of bad news for the company. I'm going to be frank, right? We brought in a new contractor and it hasn't performed well. And really just the last week, we're actually changing out our contractor to bring a new one because they just weren't performing in terms of the speed of the drilling. And really, we don't really want right now into this market more than one drill turning, but we at least want that one drill to be able to put out some significant results. So the good news is obviously it didn't chew up the entire budget. So we're changing out contractors to be able to move quicker on the drilling progress. But the other big news that did come out during this time period is the metallurgical test work, the mineralogy of the project, which makes it, I'm telling you, it's when you have super high grade, super high recovery, super high payable, even a very small pilot project, we're talking, call it 50 tons per day, something teeny, something the size of a ball mill, the size of your desk, right? Could still produce several $millions in revenue, which slightly takes your pressure off of having to access market, but more importantly, demonstrates that this is mineable. Like, because that's one of the question marks we get a lot, right? Of course, this is mineable, right? Especially in Colombia, it's done all around us, right? But to be able to demonstrate clearly, there's nothing better than be able to say, look over there, done. And can you permit? Look over there. So it really de-risks the project and makes it a whole lot more simple to understand how special this project really is.
Okay. Now, you were talking about, when we're talking about the, what you were chasing in terms of these veins, we talked about these sort of cigar-shaped veins, these plunging shoots, as it were, narrow in nature, but with the potential for more. So when you talk about these other sort of, was it 21, 22 sampled veins, what are you starting to see? What have you learned in the last 6 months?
So without a doubt, you mentioned something very strong. We do call them veins, but we're hunting for an ore shoot, is what you would call it in Spanish, right? Which are structurally controlled, where you have this the silver really coming out, right? And it's really at specific elevations where you get this gangbuster silver grades. We even get some where we'll hit the vein and it's got some decent gold, but there's no silver. And what we really want is that bonanza silver grade. So it's thank goodness we have a really good VPX with Guillermo, who has experience working on this type of things, because you really have to be able to see it in three dimensions. So obviously it's a game of hunting, but we really want to convert these targets into bona fide resource potential. And so again, we talked about a pathway. So even we say, okay, we had 6 before, we got 6 others that we put a hole into and demonstrate that they're going to also carry some significant resource. So at least we can demonstrate that pathway. And that's the overall, this overall goal here. Because it's not only just gangbuster silver, it's a sulfide. It's a silver sulfide, which I don't think it's why it floats, right? It's really, really, really a spectacular project. And really, we looked across many companies, including multiple producers, and nobody has a pure silver grade as high as this project. It is extremely high in terms of silver. 73% of the resource is silver. So if people like silver and getting into mining equities because of silver, because they know the potential of what can happen to silver price, this project is more leveraged than any other.
Well, we quite like the non-Mexico silver component to this in terms of a blended approach to silver investing as well. But I'm sure we'll talk about that in a second. Okay, the grades are good, the recoveries are good, but you kind of got to tie this together in an ore body which can be economic, and we're talking underground as well here. So you get asked this question a lot, but if you could just run us through why you think that this thing can deliver for you.
Okay, first of all, you can't do a resource and have a spotted dog, right? So we put out in resource, 60% of the resource was in the indicated category, which was really important because we get questions just like you said, does it hang together along strike and depth? But the easier thing for me, especially as a mining engineer, is to look around and say, you know what, you want to see what it looks like when you have this exact same type of geology, but maybe in the gold space, and it's called Buritica, or it's called Marmato. And so these used to be Continental, now it's Zijin, or Aris Mining, used to be Gran Colombia. But these are projects that are producing 200,000 ounces of gold a year, and they are on narrow ore shoot veins. They just started small and continued to grow until they're the beasts that they are today. So it is a very doable, and it's not like I'm making this up. I can just point to these other examples. So we know it hangs together, right? And it's another reason why I'm so fixed on this doing a pilot scale level, because if I can make pilot scale profitable, of course, when it gets bigger, it'll be able to be profitable and demonstrate it's mineable, it's recoverable, it's permittable. You can do all these different things. So it brings an extensive amount of value. I think we're undervalued for our peers, potentially because of jurisdiction. And obviously, if you have the ability to say, what are you talking about jurisdiction? Here, again, we want to have something touchable for our shareholders and others to see, to demonstrate where this project is going in the future.
Okay, so let's come on to the balance sheet a little bit here. So it's been a tough market for precious metals, gold and silver, for the last, I'm going to 3 years, and maybe the outlook is looking positive for 2024, as indications would suggest that might be the case. but you've got to manage your own balance sheet and be in control of your own future. So you've talked us through what's been going on with the drilling there. So in terms of allocation to capital and focus and efficient use of that capital, best return on capital invested, you'll be looking for. What does that look like now? What's it going to look like in 2024?
Okay, so 2024, I have one priority. And the number one priority, the holy grail, independent of market, is we would like to keep one drill turning to be able to deliver, because we think we can deliver value at the end of the drill bit still. So it's might not reward 2 drills, but it's definitely going to at least reward 1 drill. Stay in the know, make sure you have a solid news flow. So that's my number one. It's one of the big reasons why we changed contractors, because you're carrying all these fixed costs. And if you're only getting 500 meters in a month, it's really painful. But it's to keep one drill running. So that's kind of and of course, we're keeping an eye on market and intelligent. We also have an at the market facility in place, so we could kind of throttle, I think, a little and take advantage. I think we also have heard the same thing, believing that perhaps in the first quarter of next year or early Q2, there might be a big opening, so we can throttle it. But the goal is to stay financed to make sure we keep a drill turning. And that also means reducing costs in all other areas to make sure that you can manage this cycle. But I'm also going to come back to, that's also why we're looking at permitting a very small pilot scale operation, right? Because even a very small production would be super big and carrying about 80% of your exploration costs, even at a super tiny scale. It's unbelievable. We just had a board meeting and a lot of eyes open when I kind of went through this discussion. So we're looking at it multiple fronts and trying to be as intelligent as possible and how to manage this market, but still create significant value.
That's fascinating. That's fascinating. It's the kind of behavior that I think in the good times you'd been marked down for. But I think where we are today, where we find ourselves in the market today, it's really interesting, this sort of agile, nimble, reactive behavior to how do we generate non-dilutory, cash to actually get on and, with the expansion, which is the kind of key aim here, and get some revenues flowing. Is there, I know you only just discussed it, but you must have discussed it not in a vacuum. You're looking out elsewhere and seeing that these things are getting funded because it's near-term cash flow, right?
Okay, so I'm going to say that this model I didn't invent it myself. But I think where many, many, many companies failed were trying to go too big too quickly, right? And in a bad market, what do? They go to debt, right? And then they get caught with their pants down because they're geologists and they don't really, I'm sorry, that was a little rude, but maybe they got a little too far ahead of themselves, and then they have a cash crunch, and guess what? Now they're in deep trouble because they have the debt at their neck, right? So, so that's why stay as small as possible, right? And because the truth is, our value is in the exploration story anyways. Our upside, our valuation is based on our exploration. So why would I turn us into a production story? It's not about a production. It's about a de-risking, demonstrating, pilot. But guess what? It doesn't take a very big operation to cover some significant overhead, a huge percentage of it. So why get greedy, right? I think greed maybe it was kind of I even got it. Why that big? Why not twice as big? And I said, because you don't need to be twice as big, right? And so I'm not talking big numbers. We really got budgetary quotes already from China for a 50-ton per day mill, a turnkey installed at site for $750,000. We're not talking gigantic numbers here, right? So it's not something I have to go out and worry about. If I had to finance it through equity, guess what? We could finance it through equity, right? And so therefore, I don't want the strategy to become a risk. I want it to become just a part of de-risking the overall project, financially and obviously technically.
Okay, that's fascinating. I think I'm glad we did this call just for that bit of the conversation, quite frankly. So it's the growth and the value is still in the exploration. However, this is a mechanism for de-risking the project. Entirely. Right. Really enjoyed that, Ian. I appreciate your time today. Thanks for coming on. It's all a bit short notice, so I appreciate you making the time for us. Stay in touch. Let us know how you get on with this in the new year, and we will look forward to hearing from you. Thank you.
Thanks a ton, Ed. Nice seeing you again.